be careful with the risk you're taking in your portfolios. And as we talked about the last couple of days, this rally was, a good gift to rebalance risk in portfolios. I'm not saying that the markets are about to have this big crash, but as we said before, if you were stressing out over that whole decline, then you just had too much risk in your portfolio. So, use this as an opportunity to clean up that stuff that wasn't working, didn't work, stuff you took too big of bets on. Reduce those position sizes as well, just kind of work through that process. But let's talk about what you need to know before the bell this morning. The markets have had this historic run, sold off yesterday, again, a little bit more sitting. We actually tested the 50-day moving average. So again, if this market can bounce today and hold, that will actually be a decent first test of this, of turning the 50-day moving average from resistance back into support. So we'll have to see what happens today. If we fail there, then 5,400, which is where the 20-day moving average is going to be the next level of support. So there's some decent level of support. There's about 100 points, 150 points of downside right now. Upside is going to be limited to about 57.30 at the moment as well, because that's going to be where we're about to coalesce the 200-day and 100-day moving averages. So a lot of pressure about to come into the markets at this little bit higher level. But again, the markets are performing very well. There's nothing to really be overly concerned about. We've had this very nice kind of rising trend line at this point for the markets. Retail investors bought this dip very heavily. If you take a look at 0-day traded options, they're at a record right now. The number of retail investors that were buying equity funds and individual equities had a big spike. So during this entire bottoming process, retail investors were in buying, kind of this whole period. So the question is are they right? And that this is, just a short-term blip, or is this going to be a bigger corrective cycle like we saw in 2022? Where these rallies had bigger corrections and retested previous lows, et cetera, and kind of really ground out that retail investor. Because we saw this same type of environment early in 22. We saw retail investors buying the dip. By the time we got to October, they weren't really buying it anymore. So again, if this is a longer drawn out correction cycle that we're in, we're going to grind that retail investor out of the market. So it'll take some time to do that. But right now, they've been on the right side of the trade for sure. Professional investors actually sold out of a lot of this market. So they've been on the wrong side of the trade. They've also got to play catch up here. So that's one of those things that potentially gives the market a leg of support. And as we talked about previously, the buyback window is now fully open. And through May, so far, the level of buyback announcements has now reached a new record. If this current pace continues, we'll exceed $1 trillion in buybacks by the end of this year. So again, that whole buying support, we had Apple at $100 billion, Google at $70 billion. NVIDIA is going to come out and report later this month. They'll announce another big buyback as well. So, you start stacking all these things up. That's a lot of buying power for the markets. And that continues to give us a bit of support here for markets. So again, I think pullbacks here will be decently shallow. So you can use those to, you get a pullback to say 5,400-ish, right around that 20-day moving average. If that happens, that's where you reduce your hedges, put a little bit of cash to work, et cetera. But again, there's a lot of risk right now sitting right up here at that 200, 100-day moving average. And that 100-day moving average is about to cross below the 200-day here in the next week or two. So again, that's going to just kind of apply some downward pressure. So again, just be careful with the risk you're taking in your portfolios. And as we talked about the last couple of days, this rally was, a good gift to rebalance risk in portfolios. I'm not saying that the markets are about to have this big crash, but as we said before, if you were stressing out over that whole decline, then you just had too much risk in your portfolio. So, use this as an opportunity to clean up that stuff that wasn't working, didn't work, stuff you took too big of bets on. Reduce those position sizes as well, just kind of work through that process. Lastly, just keeping a watch on the dollar, because this is really the driver for everything right now in terms of risk. Dollar's starting to try to base here a bit. We're back on a buy signal, but have not really been able to get back above that 20-day moving average. If we can start to get some strength, kind of in the dollar a bit here and start to push that higher, that'll help give, lift back to equities as well, because that'll start to attract foreign capital flows back into the U.S. And again, that's one thing that's been, the weakness of the dollar has extracted capital from the markets during April. So if we can get that reversal in the dollar to occur, then that's going to start bringing dollar value back into U.S. equities, or at least equity demand for the U.S. dollar through equity exposure. So again, that's what you need to know before the bell this morning.